Welcome to Between Two Chairs, Demystifying Commercial Real Estate, the podcast that brings you the latest insights and trends on the South Florida commercial real estate market, with your hosts, Fernando Arencibia Jr. and Jennifer Woolman. In each episode, we dive into the world of commercial real estate and break down complex concepts to make them accessible for everyone. Whether you're a real estate professional, a curious investor, or just interested in the South Florida market in general, Between Two Chairs is the podcast for you. So pull up a chair and join us.
Welcome, everybody, to another episode of Between Two Chairs. My name is Fernando Arencibia Jr., and with me, as always, is the fiscally responsible Jennifer Woolman. Jennifer, say hi.
Hi. I was holding my breath on that one.
Well, I got to keep you guessing. So, Jennifer, we have a very special guest and a special episode today. Would you do the honors of introducing Mr. Brandon Wright?
Sure. Brandon Wright is the co-founder and CEO at Tongo, and I would like him to introduce himself and tell us a little bit about how he got started, where he was raised, just a little bit about you personally, Brandon, and then we can dive into Tongo, and I'll lead in with some of the stuff that I love about the platform and why.
Yeah, that's great. So we've got 2 hours, right?
Absolutely.
As long as you want.
That's right.
Yeah. I live in New York now, but I grew up in the Seattle area, and kind of the arc of my career has been largely a combination of finance and real estate. Although my very first job is kind of a funny story. People sometimes ask if entrepreneurs are made or if you can, learn to be one. In my case, it might be a combination of the two, but when I was 13, I remember my dad was laid off as a manager of a container yard on the Seattle waterfront. And he came home, and right after they had built their dream home in Redmond, Washington, the future home of Microsoft, but at the time was kind of a wooded bedroom community of Seattle. And he said, never be in middle management, it's the first to go. And so in my mind, you're either kind of on the ground floor as an analyst or an entry-level position, or you're the CEO. And those are the two roles that have staying power. And so by the time I was 24, I'd figured I'd been in entry level soon enough, and I had all of the things I needed to be a CEO, which of course is absurd. So I started a coffee shop. That was a blast. Ended up selling that about 4.5 years later. But right before that, I was at Smith Barney. And that was a really interesting place in asset management to see kind of who were successful savers. And then I started a mortgage company around the same time that I had the coffee shop. And that was a really interesting kind of window into how to successfully qualify for credit and what the profile of those people looked like. Ended up starting to acquire some kind of multifamily residential real estate since I learned how to finance it. Ended up kind of selling those businesses on my way to Cornell for business school. I was just tired of making so many mistakes the hard way, and figured out that somebody could teach me how to kind of learn some of these enduring best practices. So came to Cornell for that. And then instead of getting a job, which is what I promised my wife I would do, we really liked Ithaca, New York, and she encouraged me to start another company. So we moved that one to Manhattan. It started out basically using AI to teach lenders how to underwrite better on the other side of the credit crisis. If you've been in real estate long enough, residential or commercial, you kind of went through the credit crisis. Kind of 2006 was when it was kind of near the peak, and then things started getting really challenging in 2008. And our thesis was that lenders were spending too much on the residential side anyway, underwriting to credit score. But there was so much data, and people were more than their credit score. So we could use AI to include all of this other interesting data and help them make better decisions so there wouldn't be another credit crisis. At the time, AI was too abstract for lenders in finance. So we ended up building what was the first buy now, pay later company for non-prime consumers. So it turned out about half the economy, and I'm getting to the Tongo piece, I promise, but it turns out about half the economy has a credit score above 700 and about half below. And the half below needs to pay monthly for expensive things as well, but they have a hard time qualifying for credit. And it turns out that it's not that they lack credit worthiness. It's just that there are these things that happen when you get below 700 that are different than prime customers. For example, you have more self-employed people below 700 with more volatile income streams. So that company did really well, called Catapult. If you were at Wayfair or Lenovo or some of these other places and you're not working with a firm, Klarna or Afterpay, then you might work with Catapult. That company went public as a unicorn in 2021. And then we started asking ourselves this question. So what is kind of I'd worked with some really, really cool people along the way that were, top shelf. And we just kind of pulled back and said, like, what have we learned along the way over the last 20, 25 years in around financial services and real estate that has yet to be solved? And what we realized was that the financial economy is built for people on salary, the whole thing. If you think about it, all of your bills are due on a monthly basis under the assumption that you get paid every other week. Your credit score rewards you for making those on-time monthly payments. And we're not talking about, just loans like mortgages or rent, or we're talking about cell phone bills. We're talking about Netflix. We're talking about your gym membership. We're talking about health insurance. And that works really well for also about half the economy. But the problem is, and it's accelerated since the pandemic, it's easier to be self-employed than ever before. But self-employed professionals don't have the same tools that salary professionals do. And right now, present tense, about 46% of the professional layer of our economy. So I'm not talking about gig workers. I'm not talking about DoorDash drivers. I'm talking about doctors, lawyers, real estate agents, brokers. We're talking about interior designers. We're talking about all sorts of self-employed professionals in this big bucket. Almost half of us now and growing are self-employed. The salary piece is actually contracting. And what we kind of believe and know from being self-employed for a long time is that if you want to grow a business, the foundation, no matter what you do, the foundation of what you do requires finance. And more specifically, it requires your ability to align your income and your expenses. And that's really hard if you get paid in volatile ways. So Tongo is kind of pulling back and we're saying, look, if we want to be the financial platform for the self-employed that touches all aspects of liquidity, because you're a business, it takes money to grow, but we don't want you to have to pay it back until you get paid, right? So we have to divorce ourselves from this monthly construct and create a new one. And then when you do get paid, let's make it really easy for you to save by building products that help you automate budgeting, because it turns out that saving isn't behavior that you adopt because somebody tells you should do it. You adopt it because it's automated. That's why salary professionals are so good at contributing to 401ks. It's because they don't have to do anything. So how do we make it that easy for self-employed professionals? And we're starting in real estate because close to 10% of the self-employed population works in and around real estate. So that's kind of what we've been up to for the past 5 years. And we've kind of built in phases. But, fortunately, this is a space that's, fortunately or unfortunately, but fortunately for Tongo, this is a space that's been starved of really good ideas to help agents and brokers get access to the liquidity they need to build a business and get access to the tools that help them save and invest.
Thank you so much for that background. I love how Tongo came about from all of these building blocks of previous things that you had done as a self-employed person, but always, lead kind of like every experience you had almost led you to having to create Tongo, right? Just even for yourself, not just in terms of what you were seeing. So when I saw the platform through Avantiway, because I know you've been working very closely with Avantiway and Enrique on it, what interested me, because I know there's a commission advance / line of credit component. So maybe you can go through that kind of briefly. That talks about the money part to feed your business while you're waiting for the commission to come, which isn't, as you said, every 2 weeks. And then we can get into what I really see based on the experiences that I've had with my own business business and with other agents in terms of what to me is the bigger side of Tongo, which is the planning and the buckets and the taxes, et cetera.
Yeah.
So if you can talk about the commission advance, that would be great.
That's a great sequencing. So we basically said, look, if there's kind of two big buckets that we need to solve for, and there's even kind of a third that wraps it all together. I'll touch on that in a minute. But the first is kind of what happens between income events. And then the second thing is, well, what happens when you do get paid? And what we were asking ourselves is, where did we start? And the conclusion we came to is that it's really difficult to think about saving if you have this irregular income stream and you don't have the predictability of knowing how much you'll earn or whether you'll earn within the next 30 days or 60 days. And so the first thing we said is we have to start on the what happens between income events side. Because if we can help you stabilize cash flow, then we can help you budget. And if you can budget, then you can, instead of kind of hoarding cash because you don't know when you'll get paid, you'll actually have the confidence to set aside some money into these savings vehicles. So when you think about kind of what happens between, income events, where we started was, look, this product can't be a loan, because a loan is going to ask you to pay something every 30 days. It's going to have this compound interest feature. Compound interest can get really expensive. So we have to divorce ourselves from this monthly construct. There are some great things about loans, right? Like only pay for what you use. Right? A credit card, if you have a $20,000 credit limit on a credit card, they're not going to charge you interest on $20,000. They're going to charge you $0 if you don't use any. So let's make sure it's super flexible. So you only pay for what you use and you can draw whenever you want, just like a line of credit. The other thing is we have to make it rationally priced. So if you divorce yourself from this monthly construct, it has to be in advance. But advances, just like loans, can be used for good or evil, right? Mortgage, student loan. Those are used for good. Payday loan, title loan, those are used for evil, right? Advances, Tongo, like as little as 3% per 30 days, which after taxes, because the fees are tax deductible, it looks like a credit card. E-commission, just to kind of name names, at sometimes 15 to 30% per 30 days. Like it's hard to justify that. That's the equivalent of a payday loan. So we basically said, look, we can make advances work for good. And why is this important? It's important because of the income volatility that real estate professionals have just by the nature of the business. They don't tend to qualify for conventional lines of credit to help or business lines of credit, right? That income volatility back in the mortgage days, I could tell you what a mortgage wants is they want 2 years of W-2s and they want a couple months of income statements and they want pay stubs. If you're self-employed, you have this huge thing of tax returns and you have to look at your expenses and all these other things. So it turns out that real estate agents, if the average American has $6,400 in their monthly credit card balances, the average real estate agent has close to $19,000, 3 times, and they have 50% more credit cards in their wallet. And it's not that they're being financially irresponsible, which is kind of a stereotype. It's that they're being resourceful. They're using the only capital they have access to because they are businesses and it takes money to grow and build a business. So what we said is, look, let's help you separate business from personal. Let's help you build a line of credit against your future closings. You can draw that anytime you want. You only pay for what you use, and you don't have to repay it until the deal closes. And if the deal falls apart, which it does happen from time to time, it happens about 15% of the time nationally, only 4% for us, then you just repay it when your next deal closes. It's really simple. But if you use that responsibly, then that'll help you get access to capital between closings that you can continue to market, you can continue to take share, you can continue to mine your customer base. And that's when we can think about saving and investing, once we give you that ability to kind of stabilize cash flows between those chunky closings.
Let me just go back, just because we have a wide variety of listeners, right? And I specifically want to focus on the real estate agent, especially either the new real estate agent who's coming from a W-2 job or the real estate agent who's expanding and maybe maybe has a couple deals under their belt and is thinking of doing an LLC or PA kind of structure. And again, the reason I want to bring this up is from personal experience, but just to go back real quickly. So, and not to oversimplify, but we're here to demystify. So as a W-2 employee, right, every time you get paid, your employer takes out federal tax withholding, Social Security, and Medicare for the employee's portion of their payroll. Then they also take out Social Security and Medicare for the employer's portion of the payroll. If you're an agent, you're both, right? You're the employer and the employee. So now they're also preparing your statements for the end of the year that you just take the numbers off of there and you do your income tax reporting. Again, as a 1099 employee, you get a 1099 from your brokerage, but none of those withholdings have been withheld. So if you file your taxes quarterly, you have to make those tax estimates. And if you don't, and at the end of the year, you have to pay, obviously, your federal income taxes the next year. If you don't have somebody tracking that for you and putting what Tongo does so beautifully, the money into different buckets, then you're doing those buckets yourself. And you're trying to figure out, okay, my next deal isn't until I don't know how long. So how much do I need to put aside to save, to pay current expenses? How much do I need to put aside for taxes? Because they always say pay yourself first, but then you have to pay the tax man. And then with whatever's left over, how much do I want to put back in the business and how much do I want to put towards investing? So with that as a backdrop, can you tell us a little bit about the platform and how it works if you, one, work for a broker that has Tongo implemented, and two, if your brokerage does not have Tongo implemented, how can a single agent go about using those services?
Yeah, you've articulated the problem really well. Just to pile on to the challenge there, if you think about kind of a real estate professional's behaviors, because they also have a hard time qualifying for business credit cards or lines of credit, right? As we just stated, what happens is you've got, even before you think about, paying the taxes, which you have to do yourself, and saving and all those other things, as you mentioned, a lot of those funds just naturally and behaviorally, agents commingle business and personal stuff. So even if it's just that everything's harder if you're selling real estate. You have to be really thoughtful about how you separate business and personal expenses. So when it's time to do your taxes, you're capturing all those expenses to reduce your income tax burden. I talk about kind of a lemonade stand example. When we teach people how to think about taxes, and it's, if you have a lemonade stand and you sell $100 worth of lemonade, the IRS isn't going to tax you. If you're self-employed, the IRS isn't going to tax you on $100 because they know that it takes money to make money, and you probably spent $35 on a table and sugar and lemons and all of these other things. They're going to tax you on 100 minus the 35, which is your cost, which is they'll only tax you on $65. But if you're not tracking your gas, your listing expenses, your staging costs, if you're not tracking all that stuff, they're going to tax you on more money than you actually earned. So that part's hard. It starts with kind of consciously starting to separate those funds. So if you are working for a brokerage that pays their agents with Tongo, which for a broker feels a lot like, instead of direct depositing to 1,000 agents and keeping track of all of those agents' accounts, you're just direct depositing to one secure Tongo account. So for you as a brokerage, it should actually simplify things when you distribute commissions. The difference is, for an agent, instead of getting that direct deposit like you used to, where you now have to figure, none of those things that you described are taken out, right? None of your tax withholdings, none of the Social Security, none of the, health insurance, 401k contribution, none of that stuff's taken out. So you get your lump sum. If you're not paid with Tongo, you get your lump sum. And then you have to figure out what types of accounts you should have, where you should open them, how much to contribute, and then every single time you get paid, you have to move money all of these places, right? And that's really hard. That's why saving doesn't happen, because you get into real estate thinking that you need to be really good about selling real estate and building an outstanding customer base and learning your market. And you don't think that you have to be your own CFO, but that's how complex it becomes.
Let me just interject here, because I think that's really important. So as an agent, right, our jobs and when we get paid is actually doing the transaction. So the more of the CFO type stuff or the marketing stuff or whatever it is that we need to do to work on our business and to work on the money that results from our business, the more of that, in my opinion, that we can hire out or have somebody else do to simplify our lives, means that, especially at 3% for the loan, and I'm not sure what the rest of the fees are for the platform, but that is so minor compared to the amount of time that I get back to work on deals, which is a much higher return. So I just wanted to point that out, because what you're talking about to me was some of the most overwhelming part of doing the business. It's like, great, I've done all these transactions. Now I have to put time aside at night or on the weekend or at the end of the quarter to go back and try to do everything that I know I need to do and figure it out. And I'm not a financial expert. I'm not a CPA. I'm not a tax planning expert. So it's super important on this podcast. We always talk about having the right tools and the right people to help you and to build your team. And I look at Tongo as the CFO of the team, right? So it would be like, instead of hiring my own CFO so that I can grow the business, Tongo becomes my CFO. That doesn't mean I don't review what goes into Tongo, that I don't have a CPA, that I don't have a bookkeeper. It doesn't mean any of that. It just means that Tongo is almost like the clearinghouse for my business's financial health.
Yeah, that's heartwarming. I mean, that's what we want to be. And we've been there. We're trying to solve our own problems here. And so that's exactly what we want to be. We want to be an extension of the team. One of the things, so since we've talked a little bit about like what it's like to not get paid with Tongo, if you are paid in a brokerage that uses Tongo, it feels dramatically different. Like a lot of that heavy lifting and manual moving money back and forth and having to think and estimate about what you should set aside kind of gets automated away. So if you're paid with Tongo, then what you do is you'll securely connect probably your business checking account where you get your commissions to your Tongo account. Super secure. And then what you'll do is you'll connect any other account that you'd like to use for some form of saving or distribution. So if you have a brokerage account, you can connect that securely. Anything with an account number and routing number. If you have a solo 401k or a SEP IRA, if you have a high yield savings account where you set aside money for quarterly taxes, because that you can accumulate some real money in there and you want to be earning interest while it's sitting there. If you don't have those types of accounts, then we'll be offering those to you in Q1. So then what happens is from your dashboard, very simply, you just go in and say, I want 25% to go into my high yield savings account when I do get a commission. And I want 5% to go into my SEP IRA or my solo 401k. And then I want the rest to go into my business checking account. And every single time you get paid, that's where your money moves. You can change those distributions every single day if you want to, because sometimes, you close a bunch of deals and you want to save more. Sometimes it's been a little while and you want to save less. As an agent, by the way, that's free to you. You don't pay anything for that if your broker pays you with Tongo. The only time you're going to pay a fee right now is if you decide, look, I want to invest in the business between closings. I don't want to dip into savings to do that. I don't want to put it on a personal credit card to do that because that can affect my score or for whatever else. I'm going to use my advanced line of credit. And you don't have to repay until you get closing. That's when you incur a fee. Otherwise, that savings automation, that's a benefit extended by your brokerage. And I just think that's so important right now when there's so much choice. Agents have so much choice where they run their business. And I think they're starting to ask these questions. What is my brand, doing for me? Why should I be here? And if I'm selling real estate, as you said, Jennifer, what I want to do is spend most of my time thinking about real estate. So as a broker, if you can give me the tools to just focus on that and take some of this other stuff off the plate, especially the CFO stuff that is not only challenging, but it's anxiety inducing. It can be super stressful.
And it can be super expensive. So I learned a lesson early on luckily I had a lot of friends who were in real estate before I got in, but I had an example of a real estate agent. She was super successful. She was a residential agent. She made a ton of money, and she was busy making money and making connections and spending the money and investing it in her business. And she sends everything. She was meticulous at keeping records. She sends everything to her CPA at the end of the year. He tells her how much she owes, and she didn't have the cash. She had to take out a home equity line of credit to pay her taxes, which were over $33,000 that year. So just related to her real estate. So to me, that was, thanks to her, I learned that. So I knew to set aside. But if you're new in the business, you might not be aware of that. So that was one cautionary tale. The other one, I didn't have anybody who knew. And my best year ever, I paid a fortune in taxes because I didn't know about a profit sharing 401k and how much I can put legally aside pre-taxes. So I paid a huge tax bill that year, and I said never again. So something like a Tongo that helps do that without me thinking, because the reality is we usually don't plan for any of those things until the end of the year when we're doing our tax planning, which is why I wanted to have you on at the beginning of the year so that people can set themselves up so that whatever happened in 2025 at the end of the year planning, they're better prepared going through 2026. So thank you for that.
And let's talk about, preparing, because I really love the statement you make that you want Tongo to be the financial platform for the self-employed. One of the things that, a lot of our agents work with potential buyers of real estate. They're looking for their home. They're self-employed. They do their own taxes. And part of the issue and the dynamic, that they wrestle with is that, as you know, the guidelines for getting a loan for a home is different for self-employed than it is for a W-2 employee. And part of their kind of the thing that they wrestle with the most that I find is doing too many deductions to their income by way of the expenses that they've incurred, that they're real expenses, or having to say, well, I'm going to have to, even though I have incurred those expenses, I'm going to have to cut that back so I could show that I make more income, because I have to have that in my tax for 2 years so that they could do an amalgam of evaluating 48 months of income for them to really know that I'm credit worthy to buy a property. And so I'm wondering if in your creation of Tongo, you've also envisioned a level of education for this and a level of setting people up for being able to purchase a home.
Or better yet, with your mortgage background, come up with an additional offering, which is how because you understand 1099s, how you can offer a mortgage for a 1099 employee. I love that question.
Yeah, I love this too. This is, so the big picture you're alluding to, Fernando, is like, that is how open this opportunity is. One of the things that we were kind of telling our investors in the early days of getting Tongo off the ground is, if you're self-employed and you have this kind of income volatility, which, by the way, a lot of investors don't, with their funds, they get paid a salary too. And it's hard to relate if you've never done it before. There is no, if you think about all of the fintech innovation over the past, call it 15 years or so, since 2010, you have some cool things like Plaid, which are, infrastructure. You used to have things like, Mint, which was a budgeting app. You'd used to have Credit Karma and Credit Sesame, which were budgeting apps. Now you've got some new folks that have learned from those, and they're trying to build it again. There's a company called Pierre that's doing some cool stuff in terms of budgeting. But the problem is that if you're self-employed and you do have that income volatility, there's no budgeting app that's gonna solve that problem. Like, you just don't, in order for that to work, you need to know what you're going to earn in the future. And you don't know that when you're self-employed. And so one of the things that I think with a mortgage or a car loan, or frankly, any form of lending, period, the argument that we're making on the podcast right now is that That's a round hole and we're a square peg trying to get jammed into it. You drew out an important point, and then I'll give you my punchline answer. The important point you make is that the incentives for taxes, if you're self-employed, are completely misaligned with the incentives for qualifying for credit. You want to reduce your income if you're self-employed by listing all of your possible expenses. And for qualifying for that's going to reduce your income and reduce your taxes. But when you apply for a mortgage, they're going to punish you for that because it looks like you have less cash flow. So the question of like, does Tongo foresee a mortgage product in its future? I would love to do this. Having been in and around startups for a long enough period of time, it's hard to do all things well. So I think there is a universe where you can build a diversified financial institution for the self-employed that touches on everything from liquidity, call it advance-based lines of credit, to kind of mortgage and lending-like products. But what you can also do, so in terms of qualifying, the challenges, like self-employed people don't always qualify for the same spending power, especially in a place like Miami, where you've seen a lot of appreciation and the average price of a home is high. You might need to offset that with a down payment and an outstanding credit score, which is also hard to build when you're self-employed. What we're focused, so I'd love to get there. Where we can help address some of that right now is we can be that bridge between the monthly payment that's due on the mortgage and the earnings that you didn't get this month. Right. So how do you make sure that your credit score stays strong? And how do you make sure that you can make that payment even if you didn't close a deal? Our position there is, we know you're a professional agent. We know you'll close deals in the future. We're going to give you a line of credit based on that production. If you don't get paid this month, but you'll get paid next month, or you'll get paid in a couple of weeks, or you get paid in 2 months, access that income now and then make those payments. And by the way, if that feels strange to be drawing against a commission that you haven't closed yet, what do you think loans do? A loan is literally giving you access to money because they assume that you'll get paid your salary in the future. It's the same construct.
Well, one of the things that I really enjoyed about hearing you speak is it feels like you're very data driven, right? And you understand the data that is in front of you. And I think you perfectly expressed what the issue is for a lot of self-employed people that want to buy property, which is that you're right, priorities are misaligned, right? The incentives are misaligned. But what also happens to them is that it's not only I've decided to buy a home, so now this year I'm going to do my taxes differently, is that it's a timing issue as well. Because now I have to have 2 years back to back. And by the way, I have to make more the second year because, the bank wants to see a trend up, right? And so I've envisioned, what I'm envisioning is, and I'll throw it out here to the ether, and maybe this is something you can address, is with the power of AI, is I believe that every self-employed individual needs to make financial decisions throughout the year. And when it comes to taxes, it's the idea of, you could do your taxes this way. This is what you have truly been expensed. But by the way, if you reduce the expense amount and increase your income by this amount, you're only going to have to pay so much more of taxes, or maybe get less of a refund, right? But that gives you the ability, that basically gives you a buying power. I would love for self-employed people to know, if you do your taxes this way this year and looking at your taxes last year, you would qualify for a loan to purchase a property at this price, right? But by the way, if you make these changes this year, that qualification might go up by $100,000, but it might only cost you $5,000. Right. And so making better financial decisions, because again, it becomes a timing issue. I've seen it so many times where self-employed people are like, well, I upgraded my taxes this year. Well, it's not enough because last year was, looks terrible. So now you got to wait another year. And then for them, it becomes a risk, right? Man, I'm paying so much more than I should be paying for the hope that would, allow me to qualify. Right. And I still got to have all my other ducks in a row. Right. To your point, my credit, all those those things. So yeah, I don't know just the idea of if you give people the right information, I believe they make better financial decisions. But it's hard for somebody to make those connections when they don't know exactly what that value would be.
Totally. So you've got my wheels turning a few places. So a couple of quick ones, and then Jennifer may or may not have realized that she gave us a hack that answers some of your question a little bit earlier. So one of those things that can help people qualify for a mortgage, right? Auto loans, usually almost everybody qualifies. It's really a question of rate, but let's just think about a mortgage, which is a more intense underwrite. The first thing that people should be aware of is that the better your credit score, the more grace you get around the rest of your information. Right? So you need income, you need assets, you need credit score. The better the credit score, the more grace you get on income and assets. One of the ways that you can get a better credit score without actually changing how much money you use is by carrying less than 80%, kind of a balance to limit ratio. Right. So if you have a $10,000 available balance on your credit card and you carry more than $8,000 on that credit card at any given time, it's going to hurt your credit score more than if you carry less. But if a bunch of that is your business spend, which it probably is, then you can use other tools. Yes, use free cash flow if you want to. You can also that's also the case that we're making for an advance, because an advance is off your credit report. It doesn't affect it. It doesn't show up as debt. It's a different type of product because it's not a lending product. And that frees up your credit card capacity, which allows you to get that boost in credit score. That's the first thing. That's kind of an easy one without meaningfully changing too many behaviors. The other is this combination of assets and income, which you touched on. So the trade-offs around, I would hate to advise people to not list all of their expenses, but you asked this question, how do you show income? You want to show that. One of the things Jennifer referred to earlier is your 401k contribution or your retirement contribution. Back to that lemonade stand example. If you were to sell $100 in lemonade, but it cost you $35 to buy all of your lemons and sugar and table and sign and the whole thing, then it looked like your expenses were $35 and you'd only get taxed on 100 minus 35 or $65. That's your profit. That you'll get taxed on that. But it turns out that the IRS will treat your retirement savings, your retirement contribution, as an expense. So if you contributed, say, another $10 from that 65 into your solo 401k or your SEP IRA, then, and it's a little specific on which type of instrument, so I don't want to pretend that I used to be Series 7 licensed, I'm not anymore, but at least within 401ks it works, and self-employed people can have solo 401ks. Then you're not going to get taxed on 65, you're only going to get taxed on 55. That reduces your tax burden, but when you're qualifying for a mortgage, it doesn't get treated as an expense. So it gets treated as an expense to reduce your taxes, but it gets treated as income when you're qualifying for a mortgage. So that's kind of one of those ways that savings can kind of help you in two different ways. It can reduce your taxes, but it still gets treated as income. Now, the trick is it's easy to say save more, but again, we're back to this place where, but if my income is volatile, how do I feel comfortable? How do I feel comfortable saving?
Well, and that's where your buckets that Tongo offers come into play, right? So for example, I might have only put in 5% of whatever I made every year into a 401k. But when I had my best year ever, I could have written off a huge chunk of what I would have saved, like what I paid in taxes could have literally gone into my 401k account.
I've done the same thing, Jennifer. And you can do it if you're self-employed. You can do it at the end of the year too. You don't have to do it month by month.
Right. Exactly. And that's like, I don't take a salary until the end of the year. And that because I stockpile all year long, putting into my buckets. And then at the end of the year, based on what my income and expenses are, then I'll take a salary. So then I can put it in. But the other thing about the 401k, in addition to what Brandon was saying about it being treated as an expense for you paying taxes, but treated as income when you're getting a loan, is that if you're a first-time home buyer, you can take money from your 401k for a deposit without a penalty. So we have several episodes, one with Camaplan that talks all about 401ks, one with Carmen Peters who talks about tax laws and everything else. So to take this conversation a little further, because nobody here is a CPA or a tax accountant, we're not giving financial advice. We're just telling you, based on personal experience in this amazing platform, how you can make your life easier on the financial side while you're building your business.
You touched on Camaplan. We're excited to start working with Camaplan too. One of the things that I think is so powerful about that particular platform for people in real estate, and I saw this when I was in the mortgage business, kind of 2003 to 2010. And I've certainly seen it again in my time with Tongo and my friends who are still selling real estate, is that I just think this is a true human trait in general, is that people tend to invest in things they understand. I can certainly tell you that's true with startup investing. when you're out pitching, venture capitalists, they tend to invest in the companies they understand. I think it's very true for real estate agents. And so the asset they understand best is real estate. They spend all their time studying these markets. They understand what's for rent, what's for sale. They understand things like cap rates, that the general public doesn't. And so through some of these self-directed plans that Camaplan would offer, you can direct that savings into real estate. You can direct it into an asset you understand. You don't have to lock it up and trust it to the S&P 500. I think that just makes it much more approachable and hopefully, gives people just a little bit more kind of confidence and control over their saving.
Agreed. Talking about startups, were you part of the REACH program at all with NAR?
Yeah.
Can you tell me a little bit about that experience? Because we have some agents that are getting ready to go through the process with stuff that they've seen. So I love this program from NAR, which helps companies such as yours that benefit the real estate brokerage industry. So tell us a little bit about that experience.
It's really unique. And I've been through, kind of accelerators and other kind of stages in life with other companies. This is unique because my experience, I'll speak to my experience, but just, I think what you read or hear right now, NAR is lots of people have stuff to say about NAR. My experience is that the people at NAR, and especially the people at the REACH program that I work closely with, and that's kind of all of them, because it's a thin but well-connected team. Their sole mission is to help real estate professionals build a better business. They want to make real estate kind of the best place to work in the country. And some of that is, yes, let's have kind of some rules and regs around how you run your business so people can have confidence in the kind of the ethics and the morality of what we do. So much of it is about connecting agents and brokerages to the technology, to the people, to kind of help them grow and compete. So when we got connected with REACH, gosh, I think it was a year and a half ago now. Ashley Stinton runs the program on the residential side, and they take 7 companies on the residential side. They take 7 companies on the commercial side. What they basically do with a very strong kind of interview process and the filter is they take all of that data, what agents and representatives, brokerages are telling them from around the country. They hear what their problems are, what they're asking for, and then they try to pick companies that are solving those problems. And then what they do to those companies is they say, look, that real estate is either your sole or one of your primary target markets. But in order for you to really serve our base well, you need to meet everybody. You need to be on the ground. And so there are something between, I want to say like 5 to 10 events throughout the year. And in order to join the program, you have to commit to going to 100% of those events. Some of it is just like, hey, you need to be on the floor right next to me. I'm going to introduce you to all these people. Some of it is, I need you on stage. I need you to be telling people what you do. I need you to gauge the reaction. And then I need you to have conversations later. Some of it's fun. It'll be kind of pitch competition type stuff. But what's unique about it, so we learn a ton. Like if you're building a business, you should care more than anything. You should care about what your customers are telling you and what your prospects tell you they need. And that's where you get all of that count. You get all of that data. What's unique, so that's valuable, but what's even more valuable about that is that it doesn't stop. What happens with a lot of these programs is you get in, you have a big demo day, you talk in front of everybody, you high five, you have a couple of drinks, and then it's like, really wish you the best. This is, hey, last year you were here. Where are you going next year? How can we help you? You're still invited to all of these events. You're still getting all that customer feedback, but we know that your needs are going to evolve over time, the types of companies that you want to talk to over time. So for us, let's just say 18 months ago, we were trying to make sure that we had a product that worked really, really well for agents. And so we wanted to talk to as many agents as possible from around the country. And that was a hub to do that. Things like NXT or IOI, which is kind of a tech competition. Certainly there's a presence at, Inman and all of the other events. Blueprint. Then it became more about, okay, we have this product that we know works for agents. We've got to, how do we get to more agents? Our brokerage is thinking about these things, because if we can empower brokerages to offer things like benefits, like payroll-like benefits to their agents, that's kind of a one-to-many motion. So how do we get to know more of those brokerages in kind of, and by the way, it's not all brokerages, it's forward-thinking brokerages that actually care about their agents, that are having conversations with agents that understand that, a financial platform is something they need. Not all brokers know that. Not all brokerages are interested in that. So we needed to kind of meet our people, and NAR has been essential. They were an investor as we entered the program. I'll call it like every company that joins is, there's some sort of investment to create alignment. Fortunately, we're in a place where, they're excited. They continue to be excited by what we do, and they've continued to be an investor. But if you can get in, I think it is what you make it. No one's ever going to, you guys know, no one's ever going to build your business for you. But if you like data, and if you want to get to know what your customers are working with, then it's a really great place for that.
I appreciate you sharing that. And the reason I bring that up is because there's so many companies out there, right? I think real estate agents are sold the most of everything to, right? Fernando always says, if you want to become a millionaire, build a CRM, sell it to realtors for $20 a pop, and you'll be rich, right? So the reason I bring up Reach is because it is one of the top prop tech and real estate fintech incubators in the world. And for me, the fact that you guys went through it is a huge, almost like a good housekeeping seal of approval, that you've been vetted, that the need is definitely there, that there's potential there. And so it's like a further degree of vetting for an area that people like me, I'm not techie. But I totally understand the Tongo concept. So for me, the fact that Reach has seen the techie side and given it its stamp of approval, not only to accept you into the incubator, but to invest through Second Century Ventures, is a huge plus for me. So thank you for sharing that experience.
For sure. They're good people. They really are.
Is there anything else that you want to ask Fernando, or something that you want to bring up? We've talked about brokers real quick, but what if I'm with a brokerage, and I love the brokerage because maybe it's 100% commission or whatever my brokerage is, and it doesn't, or it's not one of these forward-thinking brokerages, but I believe in Tongo and I want that to help my business. Is there a single agent option?
Thank you for asking this question, because we've been working through this for probably the last year, kind of asking ourselves this question. And it gives me an opportunity to share a little bit about kind of what's coming next. I'll give you a quick answer to the first question. So any agent, if they'd like access to the advanced line of credit, they can come directly to gettongo.com and they can apply. If they are with one of our brokerage partners, and that's most of our time spent going to market is through brokerage partners. It helps us align with brokerages that feel the same way we do about their agents. We want to be, part of the solution, not the problem. And it tends to be the case that brokerages that like to work with Tongo have agents that like to work at their brokerage. So any agent can come directly to gettongo.com. If you are with one of our partners, you have a different path to get to Tongo. It could be through kind of your own brokerage's portal, but you have and it might have single sign-on capability, which is one of the things that we're working with Avanti right now. But that will afford you different types of benefits. Your pricing will be a little bit lower when it comes to the advanced lines of credit. If you're paid with Tongo, then all of that stuff lives within your dashboard. But only brokerages that have kind of opted into that and adopted Tongo pay their agents with Tongo. So all of the automation around saving and budgeting, right now that has to come through your broker. That's the way to get it.
Which makes sense, right? Because they get the commission and then they give you your split. So okay, thanks. I should have thought that through.
No, it's a fair question because it's actually, Jennifer, the reason that we went through brokerages first is one, it's a more efficient one-to-many motion for us to meet those agents. But two, there's actually quite a bit of technology that goes into making sure that making it easy for a brokerage to distribute commissions, it all goes to kind of one secure account. And by the way, even though that money is getting split and automatically distributed different places, you don't get your money slower. You get paid at the same amount of time. So we've had to build a lot of tech to make sure that we don't slow things down while we're helping with that. Now, what's happening in next year, just as a preview, is that we're really folding all of this into a digital wallet. And that is something that we'll initially distribute through our brokerage partners, but we will later in the year set it up so as an individual agent, you'll be able to get your own Tongo digital wallet. So here's kind of what that looks like. If you are, I haven't spent a lot of time talking about this with Enrique, but I'm going to use Avanti Way as an example. So imagine that you are an Avanti Way agent and you have a digital wallet that's powered by Tongo. You can get paid into that digital wallet, right? You can connect your own accounts, but you can also open new high yield savings accounts. You can open some of those kind of retirement accounts that you may not have. Those live in your digital wallet. If Enrique says, you know what, you're performing really well this month, I want to actually help you fund staging on this listing that you just won. I'm going to load your digital wallet with $2,000, and you now can draw against that $2,000 with an Avanti Way credit card. And so when you go, this can now be your business expense card. We can use a bunch of AI. Anytime you spend with that card, we can help you categorize and organize all of those expenses so that it's super easy to give to your CPA when it's time to do your quarterly taxes. You're not missing any of those expenses. So you have this benefit of, between commissions, I have the ability to draw on my advance if I want to. The brokerages now have the ability to contribute to agents with cash in a way that helps them market and build their business. But they also have the ability to restrict that cash so it doesn't just feel like a bonus. So he'll say, for example, we have some preferred partners within Avanti. This money is only good within those preferred partners. So your brokerages now have confidence that money is going to go toward you building your business and not something else, right? So hopefully that unlocks kind of a new layer of benefits that brokers haven't been as generous with to date. But for you, the agent, this is really the financial platform. When you do get paid, you have all of that automated budgeting. When you do spend, you have a card that will eventually give you rewards that categorizes all of your expenses for you. And I think that's just the beginning, but kind of housing it all within this digital wallet really gives it the aura of a financial platform that bridges the gap between what happens between closings, what happens once I do get paid, and let's just make it really easy to use so that you don't have to think too hard about that CFO piece.
I love that.
It's very, it's very exciting. I love the direction that you are taking. And I really love this idea of being the financial platform for the self-employed, not just the real estate self-employed, but for the self-employed. I think that's a very worthy cause. And I will throw one more thing as I'm hearing you speak and all throughout this. I envision an annual Tongo report on the financial scenarios within, the self-employed in America. I love the idea of you providing that data. It's incredibly useful to real estate agents, but really to small businesses in America to really know, to your point, this is half of the population, right? And, providing that data is very impactful.
And to help educate lenders.
Yeah, and to help educate lenders. No, absolutely.
Yeah,
so
I love that idea.
Fantastic.
Well, if you can't see the video, I took notes. That's a great idea, Fernando. Thanks for that. That's a pearl. That's a pearl.
All right. Excellent. I love that. I can't wait to see the first copy. I love that. Brandon, thank you so much for joining us today on Between Two Chairs. It has been a pleasure, sir.
My pleasure. Thanks very much for having me, you guys.
Fantastic. And thank you all for listening in. Jennifer and I are always very positively impacted by the comments that you leave in the notes and when you see us around and you tell us how much you're enjoying listening to the podcast. So we really, really appreciate you. Until the next one, say bye, Jennifer.
Bye.